It is so good to be back in the office. If you did not hear, I had COVID the last couple of weeks. Somehow, just my son and I had it at our house. We worked really hard to stay away from everyone else, and no one else in the house got it, so we consider that a win. Unfortunately, Marilyn here at the office did catch it, so she is home getting rest. Keep her in your thoughts and your prayers, please. Looking ahead this week on Thursday, Tom and I will be doing another kind of deeper dive investment update and economic outlook call. So if you'd like additional clarity into what is going on in the markets and where we see things going in the future, please set aside a few minutes to join us. The link for this call will be on our website in the next hour or two. I will get that up there. So looking at this past week here, in this week's recap, earnings build while GDP slows. So I'm going to play the intro, and then we will take a closer look at what is going on in the markets. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. So a fresh wave of positive corporate earnings surprises sent markets to new record highs last week. The Dow Jones Industrials Average increased 0.4%, while the Standard & Poor's 500 grew 1.33%. The NASDAQ Composite Index picked up 2.71% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, was up 0.68%. The week kicked off with the Dow Jones Industrials and the S&P 500 index setting record highs as the financial markets carried over the previous week's price momentum. Stocks continued to climb on a string of forecast-beating earnings results, with about half of the S&P 500 constituent companies having reported earnings. More than 80% of them have beaten Wall Street analysts' consensus estimates. Based on these results, earnings for all S&P 500 companies are expected to come in approximately 39% above the third quarter of last year. Now, forecasts are based on assumptions, and they may not materialize, so just keep that in mind. Stocks overcame disappointing earnings from two mega-cap tech names on Friday to maintain the week's solid gains. While businesses managed to post strong earnings in the third quarter, the first look at economic growth came in below consensus estimates. The gross domestic product, or GDP, grew at a 2% annualized rate in the third quarter, a slowdown from the two previous quarters, each of which posted annualized growth rates in excess of 6%. The spread of the Delta variant and backlogs in the supply chain were two major factors dragging on economic activity. As always, later on today, I will be sending out our full weekly economic update. If you're not getting this and you would like it, you can subscribe at our website. In this update is also our financial tip of the week, companies reporting earnings, financial data that we're watching, plus a riddle for you and a quote as well. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.